Yes, welcome back to my channel. Today I want to talk about developing a mechanical trading strategy the right way. And if you've been struggling with your mechanical trading strategies, or if it hasn't been working the way you want it to, you've probably missed the one thing that I'm going to dive into today. So please pay attention because this is going to be a very important topic. Almost no one talks about it. Let's get started. So after today, you will know how to build a winning mechanical trading strategy the right way. You will also know why most mechanical trading strategies fail and why a single backtest doesn't mean anything. So let's dive into the topics. Now, how to build a winning mechanical trading strategy. It all starts with a very simple idea. So if you take a look at that photo that I added in here on the right, you can see it's just a very simple breakout. So we got to move up, range, market stabilizes, and then we play for the next move up. So we got a breakout, we play for the yellow move, which is the retest, and we target the previous high with a stop below the previous low and an entry at the retest. Very simple idea. What you then want to do is create very clear rules. So which high are you going to pick for a retest? Is it the most recent high or is it the most obvious high? Where are you going to place your stop? Is it going to be the last low before the impulsive move, or is it the low before that? All these things need to be very clear. So you basically want to go from gray areas to very clear things that you basically can program. It has to be that clear. So simple idea, convert it into very clear rules, picking the relevant markets. So for example, if you take a look at Forex, it's quite a ranging market. If you take a look at commodities and indices, for example, they are really trending markets. So if you are developing a trending strategy or trend continuation, whatever it is, chances are that it might be better working in, for example, commodities or indices. Now, you want to do your initial testing. So once you've done your basic idea, you've got the clear rules, you want to do your initial testing. And that's what you want to do on relevant markets. So if I develop a strategy for Forex, I'm going to start with the initial test, 10 years of data in the majors. So not just euro dollar, all the majors, and I want to make a performance overview there. If I'm going to build a strategy for example, indices, I'm not just going to test the S&P, I'm going to test the Nasdaq, the Dow Jones, Euro Stock, the DAX, basically a portfolio, because testing one market and then having great results there doesn't really mean anything, and I will dive into that later on. So that brings me to the topic of robustness testing, and I'm going to make myself a bit smaller. There we go. Robustness testing is basically what everyone skips, but this is kind of the make or break. That goes more into it, but this is essential when you're developing a mechanical trading strategy. So what is this? So on the right, you can see results from a project I've been working on. It's basically a mechanical trading strategy for commodities. So I've picked the top 6 commodities. I still have to do some other commodities as well, but I'm testing them all. And I started with the basic strategy, so no optimized filters, no added filters, just all the trades that fit my basic simple rules. I include trading costs. Really important, guys. Most strategies are going to look great before trading costs, but when you add trading costs, the edge is gone. So include your trading costs. Then I also tested the slight entry variation. So the top is one entry variation, the bottom is another entry variation. Slight change. And I tested multiple TPs because this is going to be a trend trading strategy, and I basically want to see how much juice I can get out of a move. So I tested multiple RR targets, and I tested that in multiple relevant markets. So let's take a look. So we got gold, crude, silver, we got coffee, we got natural gas, and we've got wheat. Now on the top you can see 1, 2, 3, 4, 5 and the sample. So this is the sample size and trades. It's all tested from 2010 until now. And all these markets, 1182 trades after trading costs. These are the results in R. So net R including costs. This is with a 1 to 1, a 1 to 2, 1 to 3, 1 to 4, 1 to 5. Why I create this overview with my initial testing is because I want to see how robust the strategy is. Now, what do I mean by that? If I test the top 6 commodities and I can see it only works in 1 out of 6, what most people would be doing is exclude the 5 that don't work and trade that one thing. Now that's a big mistake. So I've tested 6 commodities, and using a 3, 4 and 5 hour target, you can see it worked in every single market except the middle one. Now that's something you want to see. If you test a portfolio, you want to see it work or kind of work in the majority of the markets that fit within that portfolio. That's really important, and like I said, most people cherry pick, oh, it works here, I'm not going to do the other ones. That's a huge mistake, because if you find that one market works in the same sector, in the same section, in the same, you know what I mean, and the others don't, you probably found something based on luck. And most people are going to trade that, and then it doesn't work live. If I take a look at the second entry method, which is slightly different, you can see it still works in every single market with the 5 hour target. I haven't done these yet. Slight loss there, but it's basically, if you take a look at the portfolio, you can see 169R, 209R basically. So that's one thing I can see here. What I can also see is if I took a 1-to-1, it's profitable. 1-to-2 is profitable. 1-to-3 is profitable. 1-to-4 is profitable. 1-to-5 is profitable with this entire portfolio. That also shows me robustness. So whatever target I use, if it's going to be the 1-to-3, 1-to-4, whatever it is, I'm not going to cherry pick here, but you can see that it all made money over this backtesting period without optimization, including costs, in multiple markets. And that really tells me, okay, this is robust. And these are the type of results what you want to see when you test for robustness. What you can also do is test time frames. So for example, if you develop a strategy for the 15-minute time frame, it should also work on the 30 minutes, excuse me. So that's also what you want to do. Like if I develop a D1 strategy, I'm not going to test the 15-minute. Those are different time frames, like the difference is too big, different players, etc. But similar time frames should also produce similar results in some form. If you develop a 15-minute time frame strategy, doesn't work on the M5, doesn't work on the 10-minute, doesn't work on the 30-minute, again, it's not robust, and you don't want to be trading that because it's basically relying on that time frame, and that's not what you want. So let's go to the next part, which basically goes hand in hand with this, which is why most mechanical trading strategies are going to fail. And number one is they are based on bad concepts. So your strategy will always be built based on concepts. Supply and demand, a breakout, a retest, whatever it is. But you also have bad concepts, such as the market maker is hunting your stop loss on the M1. And people use this as a foundation of a strategy. Now, that's most likely not going to work. So use concepts that have been there for ages, that stood the test of time, that make sense, that are real. That's your foundation. The next thing that people do is sample size is just too small. They test 3 years and they're like, oh, I found something. They test 3 years in one market. It's not how you do it. So make sure the sample size is big enough. I always start in 2010 until recent, multiple markets in the same sector, the same sort, to see how that performs. The next thing is too much optimization. If I use the 21 moving average the past 3 years, it made the most amount of money. Yes, it made the most the past 3 years. Doesn't mean it's going to be the next 3 years. So they over-optimize, building the best backtest possible. What they don't realize is the better your historical backtest is fit to previous price action, more likely it is not to work in the future. So think about that. And then, like I said, they cherry pick markets. So they test 5 markets, it works in one. Okay, I'm just going to trade at one market. Usually not the right thing to do. And they skip the robustness testing. That brings me to why a single backtest doesn't mean anything. So take a look at that picture. That's what people aim for with backtesting. They want to build the wet dream, the perfect equity curve, no drawdowns, great results. And I can tell you right now that this is never going to happen. Let me move myself there. So this is never going to happen. So you want a decent backtest. Not too optimized, just regular. Decent edges, no perfect edges, because let's face it, a perfect backtest in one market doesn't mean anything. It's about the portfolio including costs in markets that make sense, and building a better backtest does not mean you're building a better strategy. So to conclude this, strategy development is a very complex process, but I think with the tips I gave you and the mistakes that you don't want to make, you can already have a solid foundation and work on your mechanical trading strategy the right way. Now, one thing I want to add is that if you want to be part of an exclusive edge development team, which is the team I work with inside my community, we're building edges. So we got programmers, people that program different edges. Then we test edges together, we share ideas, share backtesting results, etc. And that way we can quickly build a portfolio of multiple edges. If you want to know more about it, if you want to see if you're the right fit, click the first link in the description, book a meeting with me. We can see where you're at with your trading, and maybe you can join the Edge development team. I hope you learned a lot from today's video. Thank you for watching. If you have questions, comment down below, like, subscribe. Have a great day.